Now, and let's open up Connect. Okay, there's Connect, and this is problem, I think, number 9 in Connect that we're working, and they give me the description of what's going on right here, and based on what's being described here, I have to know whether I should debit, credit an asset, debit, credit a liability, etc., right? Okay, so for this first one here, they tell me that Tanner invests 80,000 cash. So what should I do with my cash? Good, I'm going to debit cash, so I find the cash. See how much easier this is than what we were doing a minute ago? And I pop in the 80,000, don't I? Okay, got the cash side of that. Now what? In exchange, I gave office equipment valued at 26,000. So I don't know, she brought office equipment of 26,000. Is office equipment not an exchange, but in addition, we brought 26,000 cash, right? Is office equipment an asset? Yes, it is. So I have to debit it, don't I? Okay, so I'm going to go ahead and I'm going to debit my office equipment. Let's see. It's a little tight on this. Not office supplies, it's office equipment, isn't it? Okay, and so that's what, 26,000? Is that a debit? Okay, so she brought that in. Okay, so I got that 26,000. Now I need some credits here, don't I? And what should I credit? Common stock came in, so I'm going to credit my common stock. This is a chart of accounts, guys. See this what? But they don't call out to me whether it's stockholders' equity or assets, because that's kind of part of the exercise here, isn't it? For me to know. Okay, but I go ahead and do my debits have to equal my credits? That's what, 106,000? So I go ahead, I pop that in. 106,000. Sorry, I was putting zeros in there. 106,000. I pop that in. Does my journal entry balance? Now, the thing that's weird about this sort of general ledger software that they're letting us use here, that McGraw-Hill's put in there, is because you're learning, it'll let you put an uneven debit and credit. If this is a real-world software and you don't match your debits and credits, it'll say, but you don't know what you're doing? Don't put that entry in. You're going to mess everything up. Okay, so it won't let you put that in, and it would stop us. Here, if we don't equal our debits and credits, it'll let it go through because they want us to make those mistakes and learn from them, right? I guess. Why should we learn from them when they have an internal control on a software that doesn't let us make that mistake, right? It's kind of like nobody locks their keys in their car anymore, right? Because they finally figured out, well, why don't we just make it so that you can't lock the door if the keys are inside the car, right? All right. So, we've got that internal control now. But I'm going to hit record the entry, okay? And when I do, it accepts that entry, and it is now ready for me to go ahead and see. Now we're going to do entry 2 is up for grabs, but I'm going to go back up to the tabs, and I'm going to ask you a couple things, okay? There's my general ledger, right? Which is my general journal, okay? And I should be able to. I guess it's not going to show me view general journal. See that? View general journal. There's that first entry, the only entry I've made so far, right? Okay, so there it is in the journal. And when I go to the ledgers, I'm doing what? I'm posting, and that was just like a tedious thing, wasn't it? Look at what the software would do. The software, it's going to put it in the ledger cards for me, the ledger accounts for me. Isn't that beautiful? I mean, this just makes you want to jump up and shout. It's so beautiful. So here's the cash. Here's the what? Here's the office equipment. Notice I have my general ledger accounts, cash, office equipment. It probably wouldn't say assets on there, but it could. It just could say or maybe we'd have a different color for assets versus liabilities, etc. And then what? Here's my common stock down here, isn't it? Okay, see how it just posts there? Now, if I were to look at my income statement, what should I see right now? I should not see any numbers anyway, right? Because I didn't make any entries to any income statement accounts, did I? Okay, those were all balance sheet accounts. So when I look at my income statement, everything's zero. Thank God. The computer knows what it's doing. How about my statement of retained earnings? Everything is zero on the statement of retained earnings because I haven't had any income. I haven't paid any dividends yet, right? How about my balance sheet? My balance sheet should have what? $80,000 cash, $26,000 of equipment, and $106,000 of common stock, shouldn't it? Okay. Do you love this software? Look at that. Took us 20 minutes to do that with that stupid little exercise on the Excel spreadsheet, didn't it? Okay? That's why I don't care about sitting here and making you sit here and post this and post that, and we do it again and again. And what you're battling more than learning the material is you're battling making mistakes with your calculator and getting tired and putting it in the wrong account and then adding up wrong. We don't need to train your skills there. The computer will take care of all that for you, right? The only thing you need to know is when you read a transaction, you need to know which account to debit, which account to credit. And if you know how to do that and you walk out of this class knowing how to do that and knowing how to analyze an account, and we're going to start to practice with that when we start to look at our quizzes for this chapter. If you do those, know how to do those two things, this is a piece of cake class for you. Okay? All right? So that takes me back to my journal. Where'd my journal go? Where's my journal? Right here. Got to get on the tab, the right tab, right? And I'm going to go back to view transaction list so I can see the transaction that I'm working on now, which is that April 2nd one. Right? Okay, who wants to do this one? You want to try it? Okay, come on up. What's your name, sir? Jeremy? All right, thanks for being the first brave soul. Okay, and you got the mouse there. Okay, and I think this is the part where I always laugh. I start trying to tell you guys how to use software, and you were like using software in a crib. Okay, so so I think you can figure it out. So we have what? We have prepaid $9,000 for 12 months of rent for office space. Okay. Who was that? Who snuck out as soon as my back was turned? The voice. You can run, but you can't hide. Someone wants to walk out now, they'll be walking out early on their test as they realize they got an F on it. Okay? So what happens? You debit the what? Prepaid rent for $9,000. Good. You're going to credit cash for that, right? Okay, nice. You want to record that entry? Okay, good. Now go up to your tabs up there, and I'm going to ask you to tell me now in the general ledger, what should we see in the general ledger? Oh, okay, go ahead. You just show me the general ledger. That's okay. Okay, so you're showing me the general ledger. Now we got prepaid rent asset, and we've got $9,000 left cash, right? Okay, should we see anything on the income statement right now? Show me the income statement. Still all zeros, right? Okay, where should you see the impact of that transaction then, Jeremy? On the balance sheet. Okay, go ahead. There it is. Our cash is what? Is now 71,000. Our what? Our prepaid rent is 9, right? Notice the total asset stayed the same, didn't it? Right? Okay, nice work. Beautiful. Okay. And let's see if we can go back to view transaction list view here. We got 2 of them done. Let's do number 3. April 3rd. Who wants to do April 3rd? You want to do April 3rd? What's your name again, sir?
Dennis.
Dennis? Okay. Thank you, sir. Come on up. Okay, so what happened? We got the company made a credit purchase of $8,000 in office equipment and $3,600 in office supplies. So is office supply an asset or a liability or what?
Asset, so I will debit.
Asset, so you're going to debit it to increase it. Good. For what, 3,600? Nice. How do you like that computer?
It's very nice.
What makes it nice is that the way it folds down, so it doesn't cause a problem with the screen. The other one's like a Surface, you got to unhook it to turn it into a laptop, and it disconnects to the screen. Oops, did I offend somebody's computer? Okay. All right, and then what? Office equipment. Office equipment is what, for 8,000?
Yes.
Okay. And it says that we did that on account, right?
So we're gonna have 8 payments due in 10 days.
Accounts payable due in 10 days. What's going to happen if I don't pay him?
You could get hit interest or other things.
He'll come looking for me, right?
Yep.
Okay. Huh? No? Okay. Vito will come looking for me. Okay. And so is that a bill?
Yes.
Okay, good. So we're going to go ahead and we're going to record the entry. Okay. And then come back up to the
Nothing in your income
up here. Nothing in the income statement, you say?
No.
Okay. Still all zeros. Good. Where do you think that's going to impact?
Balance sheet.
Balance sheet. There's my balance sheet, right?
Liabilities now.
And now we got some bills. We got some liabilities, don't we? Isn't that beautiful? I mean, you should do this for fun at a party.
That's much better than what we were doing earlier. So.
Yeah, much easier than that process, right? I mean, how long did it take you to come up with that little income statement you wrote up here with the other way, right? Okay.
15 minutes.
About 15. Oh, that's not bad. Okay. But you're super fast. You want to do the next one? What was your name again?
Sherry.
Sherry? You want to try this one, Sherry? Oh, Sherry. You hear that all the time, right?
Yes.
Okay. All right, so go ahead and let's take a look at this one. And you're in the transaction list. And we've got this April 6th company completed services for a client and immediately received 4,000 cash. Not 1,000, not 2,000, not 3,000, but 4,000. Huh? That's before taxes. We don't get into the taxes in this class. You got to take another class for that. That's before income taxes. No, managerial would say if I make $4,000 on this, how many units did I have to sell to get to the 4,000? Tax is a whole other thing. Tax says, what did Congress come up with in their infinite wisdom to decide what you should have to pay tax on? And it has no theoretical underpinning to it at all. That's why I don't like it. If you have a loss, you don't have to pay tax. Yes, that is right, Sherry, I think, right? Got cash, you debited cash, the asset. So go ahead, record the entry. And then go back to the tabs and tell me what's going to be in the income statement. Don't just tell me first. Revenue of 4,000, right? What should my net income be right at this moment? What expenses? Have we entered any expenses?
No.
We haven't entered any expenses, so the revenue right now should be what? 4,000. Okay, good. Should the balance sheet balance right now? Balance sheet should balance, so where's that 4,000 going to show up on the balance sheet right now? Huh? What? On the balance sheet?
Wait, revenue. I don't know.
Okay, well, we got $4,000 more cash. You know that's on the balance sheet, right?
Right.
Okay, so that was the debit that went to the balance sheet. Shouldn't have there also been some amount that ends up on the balance sheet for the balance sheet to balance at this time? No, it's not an account receivable. I got the cash for it. Huh? Revenue increases what? Revenue increases retained earnings, doesn't it? And right now I don't have any expenses, so I'm betting retained earnings is going to be about $4,000 right now. Right? Okay, now go to the balance sheet. Let's look at the balance sheet. Well, okay, that's all right. Let's go to the income statement first. Sorry. Income statement first. Did you click on it? Okay, good. Okay, there's my revenue. There's my net income. What? 4,000 right now because I don't have any expenses yet, right? Or at least I haven't recorded any expenses yet.
No.
Okay, now go to the balance sheet. The cash is what? 4,000 more than it was before. You can't see 4,000 because it increased from 71,000 to 75,000. And you come down to retained earnings. You see that 4,000, which is the net income, right?
So just
Right now.
some of the steps that we did.
You know, I would think that General Ledger software would not do that. Okay, the General Ledger software would not just stick the retained earnings into the 4,000 because I think we would need to want to go through a closing process just because there may be adjustments, et cetera, that we want to make. Okay, so I would think that we would actually have to do the closing entries that we talked about. So this is another thing that's a little bit different for this thing. The reason they did it this way is they don't want you to freak out when the balance sheet's not balancing at any point in moment. But if in reality, if we had tried to pull our balance sheet before we did the closing entries, it wouldn't have balanced, right? Remember when we were messing around with it up on the board with the lemons the first day? We didn't do the closing entries first, and then we had to kind of move the money amounts
Revenue and expense stuff on the side.
to make the balance sheet balance. Okay, so we'd actually go through the closing entries, and that would then make the balance sheet balance as we closed out net income to retain earnings by debiting the expense accounts, debiting the revenue accounts, crediting the expense accounts. Assuming they had a positive net income, we would have to credit the income summary for the difference, debit income summary, credit retained earnings, right? Okay, we're going to practice some more with that, but good. Okay. All right. Who wants to do the next one? Didn't I see a hand go up back here earlier? Okay. Come on up. Brave soul. They must be getting harder as we go along, right?
Probably.
Okay. So this one you're going to have to book the entry for putting for accruing pension expense. Just kidding. Okay. So go ahead and let's take a look at the journal. Good. And go back to view transaction list. Okay. And we're going to do number 5 now, right? Sherry did 4 for us, so we can do 5 now. And come down. Good. And it says the company completed a $6,000 project for a client who must pay in 30 days. Okay. Come back up. Do we have an amount that we're going to be receiving? Wait a minute. We're going to receive an amount, right? So you debit accounts receivable. Good. $6,000. And we provided what? We provided a service. That's a revenue. There you go. Beautiful. Nice. Going to credit that for 6, right? Good job. Record the entry. Okay. Now, show me where the accounts receivable is going to be. No. That's the service revenue. You found the service revenue. It's the 4 plus the 6 is the 10, right?
So what are you looking for?
I'm looking for the accounts receivable. Accounts receivable, is it an asset? If you're going to receive, huh? If you're going to receive some money in the future, is that a future economic benefit?
Yes.
That makes it an asset, doesn't it?
Yes.
Okay, so where does it show up? Accounts receivable. Okay, is it an asset? Where do assets show up? Okay, it's good. It's on the balance sheet. Okay, that's all right. You're still learning, but you got to pay a penalty. It's penalty time. Okay. Now you're sitting there, you're saying, geez, here I volunteered and now I'm going to get hit with the magnets. Okay. All right. So come on up. Come on over. Okay. This is your penalty. Here's your balance sheet, right? Put that up on the board. Good. And I'm going to give you the asset. Where does the asset go? No. No, you just told me over there that assets show up on the balance sheet, right? So you start with the balance sheet, just like that. Put your asset. Okay, good. Now, is account receivable an asset?
Yes.
Go ahead and stick it there. There. Isn't that beautiful?
Yes.
Okay. Now, hang on. Let me ask you something. Let's say that customer pays me. Okay. What's the journal entry if the customer pays me? Huh? If the customer pays me, do they owe me a receivable anymore?
No.
So I'm going to want to reduce that receivable, right? So since it's an asset, I'll credit it.
So account receivable.
Okay, so you're going to credit account receivable, right? Okay, so go ahead and write that journal entry down. Credit the accounts receivable. Just write it down right here. Credit accounts receivable. Go ahead. How do you credit account receivable? How much is it? $6,000. Is that a debit or credit? Just go ahead and write the whole entry right here. Credit accounts receivable. Go ahead and credit it like this. Look, when you credit the accounts receivable, credit on the left for 6,000, right? Right? And then the cash, we're going to get cash for that, right?
Yes.
So go ahead and put in the cash.
Is it
On the left for a debit. Good. Cash is the account you write there. Go ahead, write cash. 6,000. Good. Excellent. So we reduced the what? We reduced the asset and we increased the asset, didn't we? Okay. So cash should now be what? 6,000 more,
Yes.
right? And the account receivable should be 0, shouldn't it? Okay.
Yes, because you got paid.
Okay, because we got paid. So come back over here and take a look at that. Go back to that general, go back up to those tabs up there. It's all right. Go back up to those tabs. And do you see right here, these tabs right here on the top, right here? Okay. All right. Come over and look at the balance sheet right now. Look at the balance sheet. No, right here. You can see it on the screen there. Look at the balance sheet. No, the balance sheet. Oh, okay, yeah, sorry. There's a balance sheet. Do you see the accounts receivable 6,000 sitting there?
Yes.
See the accounts receivable 6,000 sitting there? That's an asset because you just debited it. So it went up. So it's 6,000 now, isn't it? Okay. Now, even though go to the third go back to the list now. Go back to the list down. Come down. Come down. Go back to where's the list? Oh, I'm sorry. Yeah, go into the General Journal tab. Thank you. And go back to where it says Transaction List. See where it says View Transaction List? Okay, go back there and click on number 6 just for fun. Click on 6. Hang on a minute. Click on 6. And what I want you to do is I want you to put there the journal entry if the guy pays. So the guy pays the 6,000 now. Go ahead and give me the journal entry for that. Good. He pays me 6,000. Excellent. Okay. And am I going to still have a receivable if he's paying me? So you're going to do what with accounts receivable? Right there, accounts receivable. 106. Up. Accounts receivable. Right? Because he paid me. So I don't have that asset anymore. I got cash instead, right? What do you like better, cash or receivables? I like cash. Cash is my favorite asset. Okay, $6,000. Okay, good. You credited the cash, didn't you? Go ahead, record entry. Record entry. Okay, now go back up and take a look at the balance sheet again now. Take a look at the balance sheet. And now my accounts receivable is gone. Oh, they're showing it as 0, aren't they? Right? Okay, so now I have 6,000 more cash. The receivable is gone, isn't it? So go back to the board now and show me what the balance sheet will look like now. Show me what the balance sheet. Don't worry about writing the journal entry. Just show me what the balance sheet's going to look like. Good. Get rid of that account receivable. It's gone, and it's now cash. No, you put them under the assets. It's now cash, right? The 6,000. Okay. All right. Good. Now do me another favor. Since we messed up the exercise, now come back.
Why am I the lucky one here?
Because I like you. Okay. So come over and imagine what happens if I don't like you, right? Okay. So come over back to the general ledger, yeah. And go back to that other transaction where we just where we just record. Yeah, okay. And undo that. How are you going to undo that? Oh, okay. That's one way to do it. I didn't think you could do it that way. I was going to have you reverse it. I was going to have you debit the accounts receivable, credit the cash, but this is okay. All right, that won't make you do that because.
Should I record?
Huh? Yeah, you better record this entry, and I guess everything. Well, actually, it doesn't know what account you should have done that to. This is actually a good learning opportunity. Go back to the balance sheet. Those zeros you put in didn't do anything. Go back to the balance sheet. Those zeros you put in didn't do anything. You can't do that in accounting. You just can't reverse things. It doesn't know what account you wanted to have the nothing happen in, right? So we got to fix it the proper way. So go back to the ledger. I mean,
Yeah, it changed it back though.
oh, it did?
Yeah, I have to go to the 6,000 for the accounts receivable.
No, it didn't change it back. It didn't unchange it. What do you mean it changed it back?
The original one, 6.
Oh, did it? Oh, okay, it did do that. Okay, all right. That's not how you would do it, but that's okay. You should have reversed it, huh? You should have debited the accounts receivable and credited the cash, but that's okay. Yeah, okay. Yes, now you're done. What's your name, sir? Fabian? All right, give Fabian a hand. All right, good job, man. Sorry, other guys, that I forgot to give you a hand, but Fabian walked back and forth 2 or 3 times, so. Okay, good. Excellent, excellent. Okay, who wants to do the next one? All right, go. Good, good, good. That's all right. So they'll get their chance. So I would use the mouse, the actual physical mouse there. That thing's a pain. Okay. Which one are we on now? 7? 6. Okay, so we're on 6 now. Okay, so the company paid $11,600 cash to settle an account payable. Settle the account payable. No, we're not receiving cash. We're paying cash, aren't we? Accounts payable is a liability. We're paying it, aren't we? Pay a bill. And since it's a liability, we're paying it. We're decreasing our bill, aren't we? How do you decrease a liability? Do you debit it or credit it? Decrease a liability. You debit the liability. I'm telling you, that one slide, guys. You see how that one slide means everything to you? Okay, that one slide plus the one that shows how to plus and minus assets and liabilities with debits and credits, plus the chart of accounts. Those 3 things are the key slides in this whole process.
Why couldn't we credit on cash?
Well, because every entry has to have a debit and a credit, and we're trying to get the debit right now. Which I'm decreasing the liability accounts payable, right? Accounts payable is a liability. I'm trying to decrease it, right? Well, look, that's because you're not listening to what I'm saying. Okay. Stop and listen. Is accounts payable liability? Is accounts payable a liability? Okay, accounts payable is a liability, isn't it? Okay, I want to decrease the liability, so I have to debit it. That's what you're doing. You're debiting the liability accounts payable right now, right? For $11,600. Okay, good. Go ahead and enter that. Wait, or do whatever you have to do to get off that cursor. Okay, now, are you paying the liability? Do you pay your bills in cash? So you're paying the cash, so cash is an asset, isn't it? We're trying to reduce the cash if we're paying it, right? Okay, so do you credit a liability, an asset to reduce it? So go ahead and credit it. Okay, good. Do you want to record that entry? Okay, record the entry. Okay, good. And then come back up and go to the general ledger for a second. Okay, and look at the general ledger and notice we have our assets on top here, but keep coming down. And then we have, keep coming down. And then we have our what? We have our liabilities here, sort of the way we had in that little exercise that we did, right? Right?
Yes.
Here's my liability, account payable. You just credited it, didn't you?
Yes.
And when you credited it, didn't that pay it off? I mean, you just debited it, that paid it off. Now I'm doing it. You just debited that, you just paid it off, didn't you?
Yes.
So isn't it zero now? So because we reduced it because we paid that bill?
Yeah.
And cash did what? Cash came down, good, 11,600, right? Right?
Yes. See that on the balance sheet.
Beautiful. Go ahead and show me on the balance sheet now. And we're going to see, we won't see the detail, but we're going to see that cash is what? 63,400 and accounts payable is 0, isn't it, on the balance sheet? Okay. Okay, this is the thought process, guys. Again, it's what? It's the arrow slide. It's that slide that shows what? Shows assets, liabilities equals what? Stockholders' equity, where we show revenues, expenses, and how you increase and decrease those. It's the chart of accounts. It's those three things. And if you sit here and you get that process down, which you will, this becomes an easy class. But you got to pay your dues in making sure that part you understand. If you wanted to go running, that would be shoes for you that would help you run, right? Okay? All right, good job, man. Good. Okay, it's not easy at first, all right? You got to stick with it and you'll pick it up. Okay, who wants to do the next one? You want to do this one? Okay, come on up. What's your name?
Ingrid.
Ingrid? Okay. Ingrid's going to go look at the journal, right? Nice, okay, and we need transaction 7 now? Okay, good. Paid $2,400 cash for the premium on a 12-month insurance policy. So if I'm paying my insurance policy, I'm paying that in advance, right? So that's my prepaid insurance. Good. That's an asset. You want to increase it by debiting it. I got to talk fast when Ingrid's up there. Right? Okay, good. And they paid it for cash?
So the accounting software, does it always have it debits before credits, or is it just this one here? When you're entering stuff in.
Well, we could have put the credits first, but I think if you do that,
It says there's debits before credits down below. Is that, do you have to?
oh, I mean, it's saying that to you if you want to, because you're learning. You don't have to, but if you put your credits before your debits, the terrorists have won. Okay, so we don't do that, right? We don't let them change our way of life like that. So we're going to sit here and we're going to fight for the right to put the debits first and the credits second. That's how we do it, okay? Okay, so you go ahead. Ingrid, did you record that entry? Okay. All right, Ingrid, show me the financial statement that was affected by that transaction. Nice. Beautiful. Balance sheet. We paid the cash, and here comes my prepaid insurance now as an asset, didn't it? No, keep it with my assets. It's all in the asset section, right? Very good. Nice job. Okay. Right? Okay, good, Ingrid. Nice job. Give Ingrid a hand, right? Okay. Okay, yeah. So, I mean, theoretically, you could put the credits before the debits and nothing would happen to you, but nobody does that. If you, Debits first, credit second. Yeah, that's usually the way it goes. In fact, sometimes I'll ask students, what's the journal entry? And they'll say, accounts receivable. That's not how we talk. We say debit accounts receivable, credit cash. I mean, that's the language, that's the way it's thought of, right? And it's sort of like the way we read, left to right. Okay, so it just kind of follows with that whole process. Okay, who wants to do the next one? You, huh? I've got now they're fighting for the opportunity. Okay, you can go first, and then you'll go next. Okay. Okay. What's your name? Kaylee. Okay, Kaylee, go ahead and what are we on? What is it? Number 8 now or 9? 9. So go to your view transaction list. Okay, good, and find number 9. Okay, or sorry, we're on number 8 now. Okay, number 8. By the way, if you're doing the math and saying, oh, okay, we only got 5 more to go and there's not that many people in the class, there's like 6 exercises like this, so you'll get your chance, okay? All right, so let's go ahead. And this one, Kaylee, they tell us the company received $4,400 cash as a partial payment for service. Okay, so you already debited cash as a partial payment for work completed on April 9th. So we already completed this work, didn't we? So we already took the revenue for it, and we're just receiving the cash now. Okay. Yeah, guys, let her do it. I mean, what is the benefit that she have if you tell her what entries to put in? Okay, so you have to enter. Okay. Okay, and where is that going to show up? Good. That's on the balance sheet. Okay, and my accounts receivable is now less and my cash is more, right? Right? Okay, good. Do another one, Kaylee. Since they stole it from you. Number 9. Okay. Okay, good. So for number 9 now the company completed work for another client for $28.90 on credit. So we did the work for the client and the client said we'll pay you later. No, the client said we'll pay you later. Good. Okay. Good. Debit the accounts receivable. What is it? 2890. Okay. Good. 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 Now you got it. There you go. Beautiful. Okay. And go ahead and record that entry. Okay. Now show me show me the statements where that's going to show up.
The balance sheet as well.
That's for the account receivable. Good.
And then is it also on the income statement?
Yes. Very nice. Okay, good. Geez, this company doesn't incur any expenses. Okay. All right, good. Good job. Okay. Give her a hand too. Okay, good, good. You get double the applause because you did 2, right? Okay. All right, good. So let's go ahead and let's take a look at which one are we on now? 10? So what did it say? We paid $5,500 in cash dividends. I guess we better pay dividends since we're racking up all this revenue, not incurring any expenses. We might as well start paying out some dividends, right? Well, it's a dividend, right? So since it's a dividend, why are you touching retained earnings? It's a dividend. Okay, sorry. Looked like you were messing with retained earnings. No. $5,500. Good. We paid them a cash dividend, didn't we? Good. Nice. Record entry. Okay, now go up. No. Okay. Go ahead. Okay, there's the dividend, right? Dividend reduced my retained earnings, right? Okay, where else did that transaction show up? The other side of that transaction, which financial statement did it hit? No. Balance sheet. You know cash is on the balance sheet, right? Okay. You have to, with these, okay, good job. Okay, that was a tough one. Nice job. Okay. With these, with accounting, guys, you need to not use your imagination. Okay, so what happens? Don't sit there and say, well, I debited a dividend, which reduces my retained earnings, so it shows up on the statement of retained earnings. And so where does the other side of the transaction show up? And you say income statement? Well, look, the other side of the entry was a credit to cash. There's no way that if we saw that the debit, and we got that is on the statement of retained earnings, and the other account involved was cash, then it's got to be the balance sheet, right? So you got to kind of not let your mind have fun. You got to sit there and stay within the rules of what we're doing here, right? Okay? Okay, good. Who's next? So I just give the homework points just to the people that come up, right? Okay. You want to go ahead and try it? Okay. Okay. You can do the next one, yes. Yes, you can. Didn't I give extra credit for something? Didn't I say I give you extra credit if you put together a resume or something? Did I say that? No? Was that this class? Was that you guys? Okay, you don't. Okay, good. There's our office supplies because they did what? They purchased office supplies for 600. Whoa, whoa. What's your name? Huh? That's the hardest question I asked all night, right? What's your name? Lou? Okay, Lou. So you're going to go ahead. What are you doing? Are you typing the letters in and it's bringing the accounts up for you? That's pretty good. Go ahead. Show us how that works. Oh, nice. And how do you know it's accounts payable? Because it said what? On credit. Good. Okay. So did you enter that transaction? Record entry. Good job. Okay. Which accounts? Which financial statement? Good. Everything's on the balance sheet, right? Okay. By the way, that FS Impact tab, forget about it. I don't know what they're doing. I look at that tab and I get confused. I don't know what they're talking about, so don't worry about it. Okay, good. Nice job. Very good. Very good. I don't like that. I don't like that financial statement impact tab. Drives everybody crazy. Okay, this is a good exercise though. Outside of that, I mean, I like this exercise, and the ones like it. I just don't care for the for that financial statement impact tab. Oh no, the last one. Yeah, that's sad. The company paid $435 cash for the utility bill. Good. Utility expense. Good job. Nice. And that's showing what. Why are you taking me to the balance sheet? No, no, I'm just asking you. Why are you? I'm not telling you not to. I'm just asking you. Why did you take me there? Cash went down. Okay. And what's the other financial statement? Where we're going to see that? Good. Let's take a look at that income statement. I think we finally got some expenses on there, didn't we? Good. So this company had 12,455 of net income, didn't they? Okay, show me where the net income is going to show up on the financial statements. Good. There's my statement of retained earnings. I added the net income. I have my what? Dividends coming out. That gives me my ending balance in the retained earnings, right? So if I were to give you the beginning balance of retained earnings and give you the ending balance of retained earnings and tell you the amount of dividend, could you figure out the net income? Could you figure out the net income? If I were to give you the beginning balance, I give you a problem and I give you the beginning balance of retained earnings. I tell you beginning balance is 0. Because we're going to sit here all day showing you how to do accounting, and this is going to be useful for you. And then we're going to test you by asking you all kinds of stupid questions like this, okay? So the begin, good job. Thank you. Okay. Thank you. Is that for me? Oh, no, it's for her. Okay. Beginning balance is how much? 0. Okay, I tell you beginning balance is 0. I tell you that ending balance is what? 6955. And I tell you that the company paid dividends for the period of what? 5,500. And the way we end up testing you on this junk is then we sit there and say, how much was the net income? Which really has nothing to do with what we've been doing here and how we put together these debits and credits. It has nothing to do with the way you would practice this business, right? Okay, but it's a way of you demonstrating to us how that you understand the material, because now you can mess with a question like this. Okay, and so the way I always set up a question like this is I go ahead and I use a mnemonic that I call BASE, B-A-S-E, and it helps me to analyze the numbers for this particular problem. So the beginning balance was how much? 0. The ending balance was how much? 6955. And I have to know that the subtract from my retained earnings is my dividend, isn't it? Right? So I have 5500 is the subtract from some number that gave me the ending balance, because dividends is subtract. Everybody with me so far? Okay, and so what's going to happen? I'm going to use a subtotal. You got to get used to using subtotals in this sort of a thing. And so 6955 plus 5,500 is what? If I'm just adding up here. Huh? 12,455. So I must have had at least 12,455 before I subtracted the dividend of 5,500 to end up with the ending balance and retained earnings of 6,955, right? Right? And so how did I get from 0 to 12,455? I must have added what? I must have added 12,455, right? The A is the add, yes. A is add. I must have added 12,455, right? Which the add to retained earnings is my net income. Right? Okay. I set the problems up like that so that no matter what we ask you, if we ask you the beginning balance and retained earnings, you can work back to the beginning balance. If we ask you the ending balance, you can use that to get the ending balance. If we ask you the dividends for the period, you can use that same approach to get the dividends, can't you? Right? What time do we get out of here? Now. Who do you think you're talking to? Okay. All right. So what we're going to do is we are going to do two things. We are going to start on the Chapter 2 quiz. You are going to finish it. When we start next time, we'll go through the Chapter 2 quiz, Chapter 3 slides, Chapter 3 quiz, Let me think through this for a second. Okay. And let's see if I can. Now I did it. Okay, and let's see how some of these will work, and I'm going to try to get the whole question up there properly if I can. Maybe I can't. Maybe if I close Connect now, we're done with that. View. What do you think? One page? No, that's too small. Page width? Yeah, okay. You can see that okay, right? Yep. Okay, good. All right, so let's go ahead and let's take a look at this question. And we say that, and let me get the, see if I can get the pen up. Okay, all right, good. So let's take a look at this one. And we say that this Nico Bakery had revenues of 60,000, expense of 35,000, and paid dividends of 20,000. What is their stockholders' equity? Okay, now we know that stockholders' equity is what? What's inside stockholders' equity? What is it? Common stock? Stockholders' equity is what? Common stock plus retained earnings, isn't it? Okay, now, did they tell me anything about common stock here? They didn't tell me anything about common stock, so what do you want me to do? Right? I can't start making up facts to answer this question, so I have to go ahead and just roll with the facts they gave me, right? Okay, so if they're sitting there and they're telling me that we just started business, this is our first year of operations, what's the beginning balance in my retained earnings account? Because I'm going to analyze retained earnings because they didn't tell me anything about common stock. So what's the beginning balance? Good. Beginning balance is 0. Do I have an add here? Do I have an add? My add is supposed to be what to retain earnings? What do I add to retain earnings? What do I add to retain earnings? Huh? I add what? I add net income to my retained earnings, don't I? Isn't that the add? Okay, so I know I have to add retained earnings to my net income to my retained earnings. So that's going to be an add to the retained earnings, net income. Okay, that's my add. Do I have a subtract from retained earnings here? What's my subtract from retained earnings? Subtract is dividend of 20,000, isn't it? Okay, and then that's going to give me the ending balance, which is what this question wanted from me. That's the ending balance, right? Okay, so what's my net income? My net income is going to be my revenue of 60,000 minus my expenses of how much? Minus my expenses of 35. So what's that give me? Net income of what? 25,000? That's net income of 25,000. Does it work that if I add 25,000, I add that 25,000 my net income, so I'm going to end up with what? $5,000 ending balance? Is that the answer? And it's a credit because my retained earnings is a credit when my income is what? Is more than my expenses, right? I mean, my income is more than, my revenue is more than my expenses, right? I have positive net income. Right? Okay. Okay, good. Let's try another one. September 1st, 2015, promise ring Reported stockholders' equity of 150,000. During the month, Promise Ring generated revenues of 38, incurred expenses of 21, purchased equipment for 5,000, and paid dividends of 2. What is the amount of stockholders' equity? Well, stockholders' equity is what? Common stock plus retained earnings. Did they tell me anything about common stock here? You see what I was talking about not using your imagination? If you start using your imagination, you start saying, okay, well, what about the equipment and that? Common stock, stockholders' equities, common stock, retained earnings. That's where you keep your head, right? Okay. And so what happens? If that's the case, then I have a beginning balance then in my retained earnings of 156, don't I? Is that the beginning balance? Okay. And this question was asking me what? What is the ending balance at the end of the month, September 30th? So they want to know the ending balance, don't they? Hello? Okay. So I go ahead and I say, okay, that's fine. Then I have revenue of what? Revenue of 38,000. I have what? Good. Expenses of 21. So
Didn't say whether you paid for cash.
it doesn't make any difference. I'm calculating my net income here. And when I purchase equipment, I debit equipment, I credit cash. That whole transaction happens on the balance sheet, right? Right? My retained earnings is the beginning balance of retained earnings plus the net income minus the dividends. This is what I'm saying. Don't go crazy on the playground of, okay, we bought equipment. Stay on the range to what we're doing, right? Equipment is not an expense because that hasn't expired yet. That's a debit to equipment, a credit to cash, whatever, right? Okay. So what's my expenses here? Oh, 21,000. So what's my net income? 17,000 is my net income. Okay, good. That's an add, isn't it? To the retained earnings for my net income of 17,000. Did I pay any dividends? Yeah, I paid 2,000 a dividend, right? That's my subtract. Is a dividend? Good. 2,000. Does that give me the right answer? 171,000. Okay, guys. So there's a little bit of a difference between what we were doing with the practicing of the debit and credits in that and how we're going to actually be answering questions on the exam. So you have to understand that stuff that we did and the impact on the different financial statements like we did in those exercises to be able to fully be able to answer these questions. But then you got to tweak your analysis skills a little bit, right? Or you got to bring up your analysis skills to be able to answer the questions that you're going to see on your test. Want to do another one? Let's do number 3. Delta Company received cash in advance of $700 from a customer. As a result of this event, first give me the journal entry. I received $700 in advance from the customer. I'm going to debit cash for what? 700? I got to credit something for 700, don't I? There's a song I used to like. I think the words were free your mind and another part of your body will follow. Right? So if you're sitting there and you're stuck and you're trying to figure out what should I do, if you have a transaction that has cash in it, you know by now cash is debit when you receive it, credit when you pay it, right? So write that down. And it's amazing in accounting how then your mind is freed and the other side of the inner journal entry goes, well, here I am. Once you've cleared your mind of that first side of the journal entry, right? Okay, so we go ahead. Huh? Yeah, if you're stuck on a journal entry and cash is involved, Is cash an asset? When it increases, do we debit it? So when the problem says that you receive cash, what I sit there is when I see that, I write debit to cash down. I don't have to think about the debit anymore. Now I've got all that extra brain power for what? For the credit side of it, don't I? In fact, I write the credit down. I put the credit down. Now I don't have to remember using any brain power to remind myself to put the credit down. Now I've got my whole rest of my life to sit there and figure out what the credit is, right? And it's amazing to me how the credit goes. Here I am. Because I don't want to sit here in your brain for the rest of your life. We got better things to do, right? Okay? So if I've debited cash and I credited something else for $700 and they paid me in advance, what should I credit? This is an unearned revenue. This was the guy who came to me in advance and said, "Here, take this $120,000, but you better show up for the rest of the year and do the shows for me," right? Okay? And so we go ahead and we credit unearned revenue. Unearned revenue gets credited for $700. So what happened as a result of this? Assets increased $700, didn't they? It wasn't stockholders' equity increased by $700 because what? That was an unearned revenue, wasn't it? It wasn't liabilities decreased. Liabilities did what? They increased $700. Unearned revenue is a liability, isn't it? It wasn't assets and stockholders' equity increased. No. Assets increased and stockholders' equity stayed the same. If it said assets and liabilities increased $700, then I agree. Right? And it wasn't going to increase stockholders' equity because the what? Because the liability was the thing that increased and the stockholders' equity got left alone, didn't it? Okay. I think that's enough torture for one night. Now, go through the rest of these questions, guys, exactly the way I did these few with you, and go through the rest of them. We'll go through them together, but I'm going to call on you. And I'm going to start calling on some people that didn't volunteer this last time to come up and help us with these questions, right? Right? Okay, so be ready. Now we're starting to ask you for something, right? So be ready next time to do that. Bring the slides for Chapter 3. Bring the homework, the quiz question for Chapter 3. We'll probably knock that out next time. Question, sir? No, you don't have to turn anything in, okay? The only thing you got to turn in to me is the Scantron at the end. Give me the test back at the end of the test. That's really all I care about. Huh? We use the skinny green Scantron, but we'll talk more about that. All right, guys, have a good evening. Please drive carefully. We will see you next week. No. Speed limits. Eyes open. Don't get sleepy on the way home. Let me, if you don't mind, I want to stop the recording just so that this doesn't go on and on.